Off to Washington, comments from the new head of the Federal Reserve.
Yeah, investors are watching the Federal Reserve and its signals on the state of the U.S. economy closely this Wednesday. Some would probably call those signals out of the Federal Reserve smoke signals. Janet Yellen, she is currently delivering her first quarterly media conference as Fed chair. It comes as the American Central Bank says it continues to reduce its stimulus of the U.S. economy as the U.S. economy continues to improve. The Fed says it will buy bonds to the tune of $55 billion next month instead of $65 billion this month. Now, remember, the Fed started tapering back in December at a time when it was buying bonds to the tune of $85 billion every month. Now, Yellen also says that the Fed is reevaluating its assessment of how and when to raise interest rates. And this is an important point for stock markets and markets overall. The Fed has previously said it would consider interest rate hikes when unemployment in the United States hits 6.5%. But in a way, Janet Yellen is seen to be backing away from that commitment. And she says that just looking at unemployment won't be enough.
I think if I had to choose one indicator of the labor market, the unemployment rate is probably as good a one as I could find. But in assessing the real state of slack in the labor market and ultimately of inflationary pressures that might, or deflationary pressures that could result from that, it's appropriate to look at many more things.
OK, we're going to take a look at how stock markets are reacting this hour on the back of these comments from Janet Yellen. As you can see right here, we've actually seen stocks coming off their previous highs. Indeed, the sell-off has accelerated on Wall Street, with the Dow Jones Industrial Average down around about 0.25% this hour. The Nasdaq is down more than that, down 0.3%. Let's also talk you through the European markets. The European markets, of course, closed before Janet Yellen started speaking, but they are watching this very, very closely indeed, investors on this side of the Atlantic. And we're going to see a reaction, presumably, in the morning to Janet Yellen's comments. This is how European markets closed, though. As you can see there, the DAX in Frankfurt traded up, whereas the Paris CAC 40 and the London FTSE, they were down. Also look at the MICEX in Moscow. That's an index that we were watching over the past few days. It was down after seeing some gains on Tuesday, so I suppose only natural to see a little bit of a downward reaction after those gains. Let's talk you through some individual company news. Germany's DAX index got a boost as shares in BMW surged by almost 7%. The gain came as the German carmaker issued an upbeat forecast for sales and profits this year. BMW said pre-tax earnings will come in significantly higher than last year's 7.9 billion euros. The company is also to sell more than 2 million vehicles, according to its own forecast. Meanwhile, shares in Spanish clothes retailer Inditex reached new highs, closing 4.5% higher. It came as the owner of Zara said it saw strong sales during the first 6 weeks of its current financial year. At the same time, the retailer said its profits barely grew in the year that ended in January. Those profits came in at 2.4 billion euros, as Inditex said it continued to invest in expanding stores. Next, it's been billed as a budget for savers, bingo players and drinkers. That's how one analyst, at least, from Deloitte described the latest budget put forward by Britain's Finance Minister George Osborne. That budget included lower levies on pension savings, bingo playing and beer. At the same time, Chancellor Osborne boasted that the British economy will grow quicker than first forecast this year. But even though Britain's accounts are improving, Osborne is not walking away from austerity, as Claire Murphy explains.
There are a few surprises in store, Chancellor.
A traditional start to budget day outside number 11 Downing Street. But this Chancellor of the Exchequer says there's nothing backward about the British economy. Addressing a roused House of Commons, George Osborne declared that after years of deep recession, Britain's recovery had taken hold, with a growth forecast of 2.7% for 2014.
We are now growing faster than Germany, faster than Japan, faster than the United States. In fact, there is no major advanced economy in the world growing faster than Britain today.
But Osborne says the job for the Tory-led coalition is far from done. A top priority tackling the malaise of high borrowings propping up government spending.
Yes, the deficit is down by a third. Now, in the coming year, it will be down by a half. But it is still one of the highest in Europe, so today we take further action to bring it down.
So austerity remains the key rallying call in Whitehall. No big giveaways, just some modest tax cuts and an income boost for pensioners. With the general election next year, more sweeteners may have been kept until the run-in, but the opposition Labour Party insists the living standards of the British working class continue to plummet, and they say the coalition has fallen far short of many of the economic targets they initially aspired to.
OK, that is the picture in the UK, at least the picture of the UK budget there, Laura. And with that, I'm going to hand it back to you. I'll be back again next hour with more business headlines, including a whopper of a fine for Toyota.
All right, Marcus, we look forward to that. Thank you very much indeed. Let's turn our attentions now, though, to sport. Dan Levy is here with me in the studio. And Dan, Champions League action. Let's start with that. You were talking about Didier Drogba's return to Chelsea last night. It was a bit lacklustre after all that, though, wasn't it?
Yeah, an emotional return for him, but in the end on the pitch didn't really come together for the Ivorian star on his return to the club, where, of course, he spent 8 trophy-laden seasons. This is his first match back at Stamford Bridge after leaving the Blues, the side of which, of course, in his final game, he scored that winning penalty in the Champions League final in 2012. It didn't take long for Galatasaray to be behind in this last 16 second leg. Samuel Eto'o opening the scoring in just the 4th minute. It was finally poised at 1-1 going into the match. Chelsea taking advantage early on, and moments before half-time, Gary Cahill ramming home their advantage after he picked up the scraps from that set piece there, and Jose Mourinho's side marching on into the quarterfinals. Now, Drogba asked after if it would be a night to remember and how he would remember the evening.